Q4 FY22 and full year FY22 earnings conference call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions at the end of today's presentation. Please note that this conference call will be recorded. Joining us today on this call is Mr. Mithun Chand, Executive Director. Before we begin, I would like to mention that some of the statements made in today's call may be forward-looking in nature and may involve risk and uncertainties. For a list of such considerations, please refer to the earnings presentation. I would now like to hand the call over to Mr. Mithun Chand. Over to you, sir.
Thank you. Good morning and welcome everyone to our Q4 financial year 22 and full year 22 earnings conference call. We hope you have had a chance to review the presentation of our results, which is also available on our website. I will touch upon the operational financial performance of the company, then open the floor for the question and answer session. The contribution from new variants is growing at healthy rates across rice, maize, and vegetable seed segments. Our revenue and volumes during financial year 22 were impacted due to supply chain disruptions on account of overall shutdown of the country in the first quarter of the year. This has led to low commodity prices and low confidence among our farming community. The impact of the first quarter still shows on overall performance of the year. This has impacted both cotton and non-cotton crop sowing pattern during the current year. The revenue of cotton and maize were impacted, and rice and vegetable seed performance of the company during the year was better than other seed segments. Besides that, we have lost some government business due to non-calling of tenders. Having said that, company has outperformed the industry across the seed segments, both on revenues and volumes. In volume front, in spite of prevailing conducive environment in the country. Currently, overall confidence among the farmer fraternity on general trade in the country has improved to the pre-COVID levels or better than that. The demand driven increase in commodity prices across the world is also driving the sowing pattern of our farmers, and we have been witnessing good demand across cotton, rice, maize, and vegetable seeds. Revenue from operations for the quarter was at 54.56 crore as compared to 55.08 crore in Q4 21. EBITDA in Q4 was at negative of 7.1 crores as compared to 7.7 crores. Net loss of Q4 22 stood at 13.09 crores as compared to 14.32 crores. Revenue for operations was at 915 crores as compared to 986 crores in financial year 21. EBITDA was at 238.41 crores as compared to 334.89 crores in financial year 21. Net profit was at 208.9 crores as compared to 305.3 crores. Cash on books stood at 468 crores. Cotton volumes decreased by 24% and revenue decreased by around 23%. Expecting cotton volume to take a lead from this year and the demand would increase during the financial year during the Q1 of financial 23 on account of prevailing high cotton prices. Hybrid rice volumes increased by 19.2% in financial year 22 and revenue by close to 30%. The new contribution of new hybrid rice was up from 68 to 75%. During financial year 22, hybrid rice sales was not encouraging across the industry, but in spite of that, the company has grown its hybrid rice revenue by more than 40% and had gained the market share. The prospects for hybrid rice growth during financial year 23 is better than financial year 22. Selection rice volume grew by 6.26% in financial year 22. Maize volume decreased by 16% and revenue by 7.69% in financial year 22. The contribution of new products in maize was up from 10% to 24% of volumes. Vegetable sales volumes increased by 21% and revenue increased by 18%. The contribution of new products in vegetables was up from 23% to 56% of volumes. Considerable revenue growth is expected in vegetable seed in financial year 23. Apart from the business operations, India is going to play a major role in cotton as a commodity in terms of production and integrating into value-added production of the world. Launching 8 to 10 new products every year across each segment to drive the revenue growth. As part of rewarding our shareholders, the company has bought back shares worth of 120 crores during the year. The company has declared total dividend of 200% of the face value of rupees 2 per share during the current year. Company's motto is to deliver consistent growth on both revenue and profitability, better margins, build sizable new products, invest in R&D to have new pipeline products, looking for breakthrough technologies in the market to utilize surplus cash in the books of the company. Any major shift in adoption of hybrid seeds in rice, maize and vegetables and increase in volume for the cotton seed are going to drive the growth of the company. Now I would like to open the floor for the question and answer session.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. One moment please while we poll for questions. Our first question is from the line of Yatin Awasthi with InCred Equity. Please go ahead.
Hello, sir. Thank you for the opportunity. A few questions from my side. Firstly, the pricing for the cotton seeds is out for this year. Is it out for this year? And what is the change over the last year?
The prices are up by around 40 odd rupees compared to the previous year.
So even the selling price should be up by 30 odd rupees for the company? Around 650 then? Last year it was around 620, right? Per packet?
Ladies and gentlemen, please stay connected as we have lost the connection for the management. Ladies and gentlemen, we've got Mr. Chand's line connected once again. Mr. Awasthi, you can proceed with your question.
Okay. So I was asking last time around, the cotton price selling price for the company was around 620 rupees odd. So you're saying a 40 rupees rise. So if the company is able to retain 30 rupees from that, they should be approximately at 650 per packet this time around?
When compared to last year, as I explained earlier, if you recall, got dropped, the prices are up by 40 rupees, but we need to see how far we can realize from the dealer community. Last time the sentiment was really bad and we couldn't encash it on the increase in the price as there was a lot of movement of the unbranded seeds and the illegal BT. But compared to last year, what we see is that one, the commodity prices are high, the sentiment for the crop is also high. The acreages might go up in cotton. and the usage of the illegal BT or the unorganized segment may come down compared to last year. But even in this scenario, we see that as the inventories are high in the industry, we see that we may not realize the actual increase in the prices, but we will try to see based on the situation basis only we can have a clear idea whether we can realize that 40 rupees or not.
Noted. And so you also pointed to the illegal cotton seeds. Last time it was a menace, and wanted to understand how big is the menace this time around. Is the impact going to be as severe? Because there are news reports saying that it's actually bigger than last year, the problem of illegal seeds.
What we see is that the illegal usage of the unorganized segment seeds, what we call as HTBT seeds, may not increase in last year. The initial sentiment or the initial feel what we get from the market is that last year the farmers have really suffered in terms of the low yields, and the seed was really very bad in terms of the performance when compared to the branded seeds. So as a sentiment, it's not as great as what it was earlier. Definitely the usage will be there. It has given a mixed result, so in some pockets it might go, but whatever we see, the increase in the cotton acreages, that will only come for the branded seeds. That's what our initial feel is. But at the end of the day, again, if the monsoon arrives in the right time, then the usage of organized players or the organized seed will definitely come up. If it gets delayed, if the sentiment goes bad, then they may shift for it. But as of now, we see that it will all come to the organized segment.
Okay, understood. So your gross profit seems to be under stress in your non-cotton segment, which used to be predominantly more than 50%, slowly, steadily sliding down and is now closer to 45%. Are you taking price hikes? Because I don't believe the commodity prices, raw materials that you use would have gone down in prices. So are you taking equivalent amount of price hikes to cover up this gross profit loss?
Yeah, if you see the profitability, if you see in the last 4-5 years, non-cotton crops are more profitable than the cotton crop. And whatever increase in the commodity price or whatever increase in the production side, we tend to pass it on to the farmer because it only translates to 0.5% of the total value of the selling price. So that's not an issue in passing out to the farmers. But if you see the other side, the cotton revenues are down by more than 20%. Actually, that has impacted the profitability of the company because even though it's not, it doesn't contribute much to the bottom line as a crop, but if you see as a whole, the other expenses get absorbed in the cotton sales. That has impacted the profitability to some extent this year, and some non-receipts of the government payments that also which we have provided for the provision for bad debts as a policy. We are not able to recover within 2 years. We provide for that. That has also impacted to some extent the profitability. Otherwise, in terms of the crop segment, non-cotton crops are more profitable than the cotton crop.
No.
And to answer to your point, whatever increase in the price or whatever increase in the production price, we tend to pass it on to the farmer, and that's not an issue.
Okay, got it, sir. Sir, in February this year, there was a ruling by the Telangana Authority of Advanced Ruling. In 2 separate rulings, they said that GST is going to be implemented on seed sector because seed is different from grain and is not an agriculture produce. Could you shed some light on this ruling? Because if this ruling is true, wouldn't this mean that income tax would also start being levied on the agriculture sector, specifically on the seed sector? Because this ruling could, set a precedent for the same.
One thing that the case of the individual company, that's not given to the industry as such, because the operations of that particular company which have applied for the clarification was different, and that is not for the entire seed segment. That is for the processed seeds, which usually they take on on job work. For that, they need to charge for that. But otherwise, as a company, as an industry, we are not following that. And as a central lab, the seats are exempted from that and GST.
Understood. So last question from my side. There was a ruling passed on gene editing for seeds. How advantageous is this for the company and industry? If it is advantageous at all, is it like bypassing the GMO regulation and now something can actually happen because gene editing is something which was not allowed and now is allowed?
Definitely, that's a good sign for the industry. Not in particular to one particular case, but what we need to see is that the government intention to get new technologies. If you see in the past 7, 8, 9 years, nothing is more again in terms of the upgradation of the technology or getting of the new technology. In the present year, to be precise, in the last 6, 8 months, the moment the government acceptance and the companies who are providing technologies and as a seed industry also, we are working proactively in terms of getting the new technologies into the country. What we have witnessed here is that regarding HTBT, how it has become popular, even though it's illegal. If you don't tend to get new technologies, people get sourced for the illegal things, and that's not beneficial for the farmers or for the country. So the government is also understanding that, and the technology providers is also working with the government. What we see from the first move is that going forward, the government will be acting very fast in terms of getting new technology and the work within the advanced stages. So what we see is that we can definitely see with the action, we can definitely see that the new technologies can be allowed in India as early as possible.
Understood. So thank you so much for answering all the questions, please.
Thank you. Our next question is from the line of Sarvesh Gupta with Maximal Capital. Please go ahead.
Good afternoon, sir. Sir, 2-3 questions. One is on the maize side, we had a bad year. So, I mean, the assumption that I was at least working with was that we should be able to, given the low penetration in the non-cotton side, we should be able to grow. So, if you can, shed some more light on the performance in the maize segment, that's the first question.
So if you see the overall growth, overall performance of the year, as an industry, entire hybrid seed industry was on this, it has not grown as what it has grown in the last 10 to 12 years because of the COVID and the first quarter being the worst quarter in terms of the effect of the COVID second wave. And the commodity prices were really low. If you see the commodity prices for there for maize and rice and the cotton were half the price what it is now during that first quarter. So the sentiment and the adaptation or the farmers' intention to spend more on the seed or any other input was a bit bad in the first quarter. So that has that has impacted the actual growth of the hybrid seed. But that's a very temporary process. And what we see now, again, the sentiment is that the hybrid seed will grow as what it has grown in the previous years. And there are many reports that the hybrid seed in India will grow at 10 to 12% for the next 15 years. So we are very quite bullish about the industry and the growth of the hybrid seeds. For maize, even though the industry was bad, we have done well in terms of the trade. We're down only in terms of the government business, as we have mentioned both in the presentation and the opening remarks. And the government were not able to call for tenders, and they were not able to give subsidies in some states, and we were not able to participate in that. So that has impacted sales to some extent. But otherwise, if you see the normal trade, apart from the government trade, we have grown in the normal trade and the revenues are also out. So what we see is as a crop, Maize will be a very good crop, and the initiatives taken by the government to use at the industrial usage, the new plants for the ethanol will all definitely drive for the maize consumption. And the fodder also is going up year on year. And not only fodder, even the industry, human consumption is also going up. In all three aspects, industrial, fodder, and human consumption, what we see, maize is a very good crop. And definitely the maize acreages will increase going down the line. So maize is a very good crop to be in, and we are very confident about the growth of the industry, and we will definitely outperform the growth of the industry because we have launched many new hybrids in maize. We have launched summer spring corn. We are launching new varieties in sweet corn. So it will be very it's a very lucrative crop in the portfolio, and we still tend to work in this.
Okay, so the earlier guidance of 15 to 20% growth in the non-cotton side stays for sort of this year.
Yeah, definitely. If you see, even if you take the non-cotton segment this year, we have grown between 15 to odd percent if you take non-cotton segment, and the contribution of the non-cotton has come up to 65%, close to 65%, from around 25% to 30, less than 30% 4 years back. So that shows the growth of the non-cotton segment. And if you see rice, hybrid, even the industry was having muted growth, we have grown by more than 25% in hybrid rice. So that shows us strength of the products and the portfolio. And we still we have a lot of area to be covered under rice. So rice, maize, vegetables are the three big crops which can have a tremendous potential going forward, and which can definitely grow. With cotton, yeah, with this wave, definitely we have a chance to grow with this wave, but it might remain sideways on a longer tenure, but on a short-term basis on a year, immediately of the coming year, cotton also looks good.
So what is the inventory that we are planning for cotton or placing this season compared to last year?
So with the reduced rates, we think that the cotton acreages might go up close to like 15% compared to the previous years, and we will grow in line with the industry. We will be growing between 15 to 20% in cotton also this year.
So 15 to 20% for cotton. So we will still be below FY21 level in a way, because last year we had degrown by 24%.
23%. So that we will be close to those numbers.
Okay. So we expect this
and
to
again, we need to see the sentiment of the crop. As of now, the crop looks good. Like we think that the averages will come up by 15%. So we are saying growth will be close to 20%. Based on that, our growth varies.
Okay.
But definitely we see a growth with this.
Okay. And what is happening on the cost side, sir? I mean, in terms of what we provide to our farmers for growing these seeds, any escalation there?
In terms of the production cost, there was slight increase in the production cost, but not much to the impact.
Okay, understood, sir. Thank you, and all the best.
Thank you. Our next question is from the line of Himanshu Upadhyay with O3 Capital. Please go ahead.
Yeah, good morning. See, I had a question on this maize only, where you said the government did not take that much quantity, but the contribution of our new products has increased significantly. So from 10% to 24%. So the volume for our old products has decreased very dramatically, and do new products only go to the retail channel, or new products also go through the government tender process? So can you elaborate on the mix, and what do we look ahead on this thing, and how should we read about new products growing significantly? Hello?
Ladies and gentlemen, we've lost the line of the management. Please stay connected. Ladies and gentlemen, we've got the connection back of Mr. Mithun Chand. Mr. Upadhyay, you can proceed with your question.
Yeah, so my question was related to maize only. What we have stated is the new products have their contribution has increased significantly, okay, from 10% to nearly 24%, okay, and which effectively means old products have gone down. Is it that the government only buys the old products, or they even buy new products, but just we have been not able to sell them, or it means just what does this signify? Okay, and was the brand pretty big in the old brand which was there in maize, and hence it brought down the whole market, means for the overall volume for us?
So basically, if you see maize, we have many hybrids. Maize has got more than the market close to 60 hybrids in maize. Small, but out of which 10 to 12 hybrids contribute to the majority of the revenue. If you see, when we talk about the government, usually we supply, or the government asks for the varieties which are already proven in the market. They don't take chance with the new varieties. So that need to be notified, or that need to be sold in the market for 3 or 4 years. That's why they call for the tender. Under the created brands, or the hybrids which are already there in the market. So in that way, the new hybrids which are including in the market may not be a part of it. And the other thing is that the new hybrid what we produce, usually we give it to the new markets, or the markets where we are targeting, so that to improve our sales. So that will be the strategy for our new hybrids. And maize, if you see even the revenues, even though the volumes are down, the revenues are not as down in respect to the volumes, because the new hybrids, whatever we are launching, are very high segment hybrids, and a very specialized hybrid. For example, we are launching that the prices are pretty high, and that is only specific areas where we can grow that still from. So these are the types of hybrids what we are launching. So that the product mix is already changing. If you see in the last 6-7 years, even the volumes were not that high in terms of year-on-year basis, but the revenues are high. So if you recollect what we were saying in 7 or 8 years back, we were saying that we are moving from three-way cross to a single cross hybrids, where the yields and the prices both are high. So we are moving to those type of segments, and more than 80-85% is single cross hybrids in our portfolio. So that's where we are shifting to.
And see, we are introducing many new products across the board, okay? And even in some of the crops, we need to penetrate more. What special efforts are we making on the sales side, okay, and marketing side to grow the revenue besides cotton, okay? So in the non-cotton segment, what special efforts are we taking?
If you see our portfolio, if you see our company, we are the only company in India who have got a huge product portfolio. We are there in both cotton and non-cotton segments. And if you see, most of the companies are dominant in cotton or any other crop. But as a company, we are the only company in India who are strong both in cotton and non-cotton segments. In the crops where we operate, especially like maize, cotton, and we are big in the top 3. But if you take even maize, rice, sunflower, bajra, now we are doing good work in bajra also. If you see these 3-4 crops, we are in the top 3 in these crops as well. And the and the presence of the company is more than 25 states across India. And even in terms of the marketing network or in terms of the presence across India, we have the highest presence and higher data network across India when compared to any other company. And in the efforts, you can always see in the volume growth. If you take highest volumes, in the last 4 years, we are growing at more than 40-50% year on year. No doubt, to start with, it was a small base, but now we are close to 10% market share in advertised, 10-12% market share in advertised. So from less than 2% to 10% market share in the last 4-5 years, that itself shows the strength of the product and our sorry and our distribution strength and network. And the efforts, if we talk in terms of the contribution from the non-cotton segment in the last 6-7 years, it has come from below 25% to almost like 65% in terms of the contribution. So that shows the strength and the growth rate in non-cotton segment. And still going forward, non-cotton segments will go much faster in the cotton segment.
And one small thing, one basic question. When we say new product or new hybrid rice, contribution has increased. So how do we define this? Is it 3 years vintage, 5 years vintage, 1 year vintage? Means what is?
We don't have any specific guidelines for that. But when you say in rice, these are hybrid variety. There are a couple of varieties which still have the potential to grow at large in terms of the market share. There are many areas where it can grow. Usually, when we talk about the hybrids or mature hybrids, where we see a launch of 4-5 years and it gets stabilized. But when we see hybrid, when we talk about new in the company, the hybrids which still are going at much faster than 30-40% because the scope and the penetration is higher. That depends on the hybrid to hybrid, whether we say it's new or not. Not necessarily that any hybrid below 4 years should be called that. Based on the potential, we say it is new or the mature hybrid.
And in last year, effectively, how many crops or new products we would have introduced in all the 4 segments?
See, again, that depends. Like, definitely nothing less than 20 hybrids, but all the hybrids, all the variants which we have introduced may not come up because some may not work in the markets.
Okay. Thank you for. Yeah, thank you from my side.
Thank you. Our next question is from the line of Sanjay Setapati with Ampersand Capital Limited. Please go ahead.
Yeah, so thanks for the opportunity. My first question is that now you are looking at a better fiscal 23. So will your margin also go back to what you had seen in fiscal 21 along with recovery in revenue?
Definitely, the margins will be in line with the previous years. This is at the start. We told in the start of the year itself, this is one of the year, and we cannot be a base for the margins. We'll go back to the previous margins as the business and everything gets normalized, and it's almost normalized now. We don't see any pressure on the margins. In fact, we go back to our previous answer that the margin going forward, the margins will definitely see growth, and that will happen from this year.
And sir, if I can just ask you that in your balance sheet, I could see that your inventory for some biological this thing has gone down a lot, and overall inventory is not really higher as much on a year-on-year basis. Has that got anything to do with your demand outlook? And related to that though you are looking at certain amount of growth, but are you prepared for a much higher demand if that happens, considering the kind of inventory that you have?
So basically, if you see the inventories are in line with last year. So we are not seeing much of a inventory. growth in the inventory because we have enough inventory of cotton, so we are not given for production. So that's driving the value of the inventory. Apart from that, the non-cotton segment, the inventories are much higher than last year. So as a policy, what we produce is only for the demand. So when we are talking about the 15 to 20% growth, we have inventory for that, and we are doing that. Nothing to worry about the inventory. It's in line with the normal things. Only thing the inventory which is down is the cotton inventory. Because we have enough inventory which is there for which we are carrying for all the last year because we couldn't sell much of the inventory in cotton that we are cutting down this year.
Understood. And coming back to your, like you have been seeing volatility in your top line as well as bottom line for several years now. Though on a 4-5 year basis, there has not been much of growth. While your mix has changed.
Sorry, it was not clear. Can you please repeat?
So my question is that for several years now, overall growth has not been there in Kaveri, while the product mix has changed a lot. And every year, of course, brings its own challenge. Though you had some kind of a plan that after changing the product mix, you will be able to consistently grow on a 15% kind of basis. So do we have that kind of visibility from here on?
Definitely, if you see our journey, when we say this has muted growth for the last 5-6 years, but if you see the product mix contribution, cotton was more than 75%. And as a macro years and as a volume, the cotton is down in the company, and the prices in the cotton is down by more than 25% because of the government regulations. If you go back to the 2015 level, the cotton was still at 930 rupees. And now it's about reduced to 700 rupees in the previous year. That's an impact of 25% over and above the cotton sales. So these are impacted in terms of the revenue. But if you take the actual volumes as such, except for the cotton, all of the crops do. And if you see now, the cotton is not that significant, even though it's important and significant crop, but in terms of the contribution to the revenue, it is much lower than what it was earlier. So now you see that growth path because that was the driving portfolio what we had, and we were growing. So it just compensated or muted with growth as such. But from here onwards, you can see the growth. It will go back to the previous year.
Understood. And related to that, considering that you have been paying out through buyback or whatever, but still you have a lot of cash, is there a possibility of Kaveri kind of getting into some kind of a non-seed business and make it less seasonal and less monsoon dependent? And is there any bigger plan of investment, or you just stick to what you are doing now?
So basically, we don't have intention or thought as of now to go to other segments because seed is a segment we still have a potential to grow more than 12 to 15% year-on-year basis. And when you see Indian seed market when compared to other seed markets, it's much lower. The penetration is lower and the scope for growth is pretty high. And we are getting very new technologies. And now we are expanding to other countries. So in terms of our approach, we will be spending for the seed business only as of now, on seed-related segment. And that's the reason we are doing buybacks and rewarding shareholders in the other aspects. So we don't require much of a cash for the business. If there's any new technology in seed, then definitely we'll have the cash. But as of now, whatever spend we want to do, it's only in the seed segment, and still we see it's a long way to go in seeds.
Understood. Thanks a lot, sir.
Thank you. Our next question is from the line of Sumant Kumar with Motilal Oswal. Please go ahead.
My question related to cotton seeds. So you guided a 15 to 20% growth in volume. So whatever the growth guidance you have given, the total number of packets is coming around 6.4 on base of FY22. But what we are expecting in FY23, it's one of the bumper cotton crop sowing. and still we are lower than 7 million packet, 7 to 7.2 million packet we have reported in FY 2020 and 21. So why our guidance is lower? Can we expect a 7 million packet sales or more than 7 million packet sales in FY23? If not, is there any challenges in the current market scenario?
So if you take out the crop sentiment, even though the cotton crop looks good, but all the commodity prices, if you take maize, if you take rice, any alternate crop like soya or pulses, all the prices are high. In terms of the growth in the cotton market, will be only in between the 10 to 15%, not more than that. When we anticipate a growth of 10 to 15%, we are as a company, we are saying that we will go in between 15 to 20%. So we will go in line with the industry. If you say the industry will grow by 30-40%, then definitely we will go in line with the industry. But what we see is that the industry can grow in between 10 to 15%, not more than that, because all the alternate crops are also good.
Okay. So 15-20% is a fair guidance.
What I want to say is that we will grow better than the industry.
Okay. Okay. By any chance, do you think the scenario going on the ground and the overall cotton price is higher compared to other crop, the profitability is better? In that case, do you think you can revise your guidance in or you can show a 7 million packet? Any positive indication?
So we have the enough inventory, we have the network, we have the brand acceptance in the farming community. So if the industry grows in that fashion, will as I said, will grow much better than the industry, and we'll have the first advantage for that in terms of the growth. But what our anticipation is that when you see the alternate crop, apart from cotton, usually they go for soya or they go for pulses or any other alternate crops. All the commodity prices are good. So in that sense, what we see, definitely cotton acreages will go up. In some areas it will lead to cotton, some areas the cotton acreages will come down. But overall as a country, what we see is that it will grow in between the 10 to 15%, not more than that. If by any chance, if the cotton acreages grows more than our anticipation, then definitely we have inventory. That shouldn't be a challenge to take the market share.
Okay. So you said cotton 15 to 20%, correct? Cotton volume growth?
For the company, we say 15 to 20%. For the industry, it should be between 10 to 15%.
Okay. Thank you so much.
Thank you. Our next question is from the line of Arul Selvan with Value Research. Please go ahead.
Hi, this was more of an observation. I think the management's voice is a little bit muffled. If we could just request you to kind of keep some distance on the mic, we'll be able to hear better. Thank you.
Okay.
Thank you. Next question is from the line of Anurag Jain, an investor. Please go ahead.
Hello. Good morning. First, my question is on the mustard seeds. Management had highlighted last year that mustard seed is going to be a growth area.
Hello?
Hello, sir. Just give me one moment.
Can you hear me? Yeah.
So the questions have been removed. There are no further questions. I would now like to hand the conference over to Mr. Mithun Gupta for closing remarks.
Hello? There was some question. Someone was asking a question.
So the questions have been removed. You can proceed for closing comments.
Yeah. Thanks for the call. For any other further queries or any questions, feel free to ask the investor relation desk, or you can contact them, and we'll be able to help. Thanks.
Thank you. On behalf of Kaveri Seed, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.